CarMax is higher. The earnings revenue beat, comp sales were good. Jenny, that's you.
Yeah, so it's interesting. So it's still down about 10%. This is in our growth portfolio. I think it's a fantastic buy here. And the reason I mentioned the down 10% is because it hasn't run so much this year. So where you stand is retail sales came in at plus 9%. Gross profit was up 13%. And what's I think the most compelling part is that as tariffs do kick in, and cars get more expensive, new cars get more expensive, that's really favorable for the used car market. CarMax had a tough time because there were supply production problems during COVID, and now we're past that. So supply is there, used cars are going to be compelling, trades at 16 times earnings, and the expected growth is 14 to 18% for the next 3 years. Not bad, right?
Yeah, Accenture, that is falling after a drop in bookings. Steph, that's you. It's a 52-week low. For shares of Accenture today.
I know always trades crummy around its earnings reports, but usually it kind of recovers. I don't see this recovering anytime soon. Not when they saw soft bookings, down 6% year over year. Now they're restructuring their services business, which none of us can understand, and they had a gross margin miss. So to me, into strength, I'm likely to trim.
Rocket companies, you've been flagging this, breaking out above its 200-day, have you, Josh? Tell us more.
Yeah, so this is a really interesting situation because it is both going to be, in my view, one of the biggest beneficiaries if and when interest rates do fall. They don't even have to come down much because effectively this is a mortgage business. And what we want is, at a minimum, a refinancing boom. So if you get rates coming down and not coming down because the economy's crashing, you're going to see a ton of demand for what Rocket does, and I don't think that's in the stock. But more interestingly, now you have Value Act Capital, which is arguably the company, the activist fund that was most behind the turnaround at Microsoft and at Salesforce. They are 9.9% of Rocket now. They bought 15 million shares this spring. And I think that when they get into a situation like this, it's probably something where Rocket is going to at least be willing to listen. They're not the type of activist that comes in and starts saying, we're firing everyone, we want all these board seats. It usually starts with a constructive conversation. So I think that's what this stock needs. They're in the midst of two massive transactions. They're buying a huge mortgage servicing company called Mr. Cooper, and they're buying Redfin, which most people know as like a lead gen website for realtors, also refers a lot of mortgage business. They're trying to checkmate the entire online real estate ecosystem while things are depressed. And when rates come down, mortgage rates come down with them, demand for new mortgages and for refinancings comes back. This is the type of stock that benefits. And that's the play here. And I think it's very, very early to that potential happening.
All right, good looking chart and a move there as we're talking about it too.